everyone, I'm Cheyenne Malone. We have Tyson Jominy, Vice President of Data and Analytics at J.D. Power. This is the man to talk to when we got some tough questions, and I know you sit back and analyze everything. Welcome back to the show, Tyson. We look forward to kind of hearing what you have to say. First, let's start with last year when it comes to new vehicle sales for 2023. How did we end the year?
I mean, sales ended quite strongly. I mean, we saw a total industry sales of about 15.5 million, which is good news. We're getting back closer to to the old normal.
Yes.
However, the way we got there was kind of interesting. While we did see very strong growth on the retail side, we actually saw that fleet sales were up 50% last year, which was driving a lot of that growth.
Why is that?
Well, I mean, historically, fleet sales have been a pressure release valve for the industry. When we have too much production, we send units there. However, even in 23, the profit levels for sales to the fleet channel still remained very high. So as a result, automakers were exploiting that opportunity. However, as we get into 24, that opportunity is mostly in the rearview mirror now. It's time to focus on retail sales for this industry.
And I'm curious to know about EV and even hybrid sales. How do those look in 2023?
Yeah, I mean, as we ended the year, actually, as we started the year, it was all about EVs. And as we ended the year, it was all about hybrids. And the reality is those two went neck and neck all year and ended up at almost identical share levels between the two. I mean, we ended up with basically they both have share in the 8% range for all of 2023. Despite the fact that EV started so strongly, they didn't end quite as well, even though hybrids were everything that we were talking about at the end of the year. I mean, hybrids came on very strong. We saw some very good supply rebounds from Toyota and Honda, and that really helped drive hybrids forward.
And what about when it comes to MSRPs? We're seeing those prices continuing to climb up. Talk to us about that.
Yeah, our exit rate for the year was over $50,000 average MSRP, the first time ever we've seen that in J.D. Power data as we exited the year. So even though we were expecting prices to start to fall, we were seeing the automakers continue to push sticker prices higher, even as dealers are starting to deal more and incentives are coming back. And we're actually seeing transaction prices falling. Our exit rate for transaction prices in December, we had a lower transaction price in December than we did in January. I don't think I've ever seen that happen in this industry.
Wow, interesting. And you know, when it comes down to who's buying, who are today's consumers, demographics, who is that?
Well, I mean, with these high prices we're talking about, I mean, $50,000 MSRPs and $46,000 transaction prices, it's a very expensive market. And so we are seeing a very mature, wealthy consumer driving it forward. But who we're not seeing, and perhaps something we need to focus on in this industry, is that a lot of the youthful consumers and also subprime consumers, they're basically priced out of the market right now. We're seeing subprime sales rates in the single digits. I mean, we're talking 6-7% of sales only to subprime. Years past that could be 12-14%. Meanwhile, the number of under 35 buyers in the market, their percent keeps falling every year, and that's holding the industry back. I mean, we may be giving up 300 to 500,000 retail sales because we are priced too high.
Will we see any new incentives, or even more than last year, this year?
Yeah, we're expecting the incentive level to go up, and not just the absolute dollars, but certainly the types of incentives that we're seeing as well. While automakers have returned to the market primarily in the form of APR, so supported rates and helping consumers get a lower monthly payment, what we really aren't seeing is a lot of lease support that is coming back, but nowhere near previous levels. And what there's almost nothing of in the market is just pure cash on the hood. That it still remains a very unique incentive at this point. And that really is what drove the industry back in 17, 18, 19 calendar years. A lot of cash was driving it. So there's opportunity to get more back in that space as production increases and as inventories rise.
Folks seem to be holding on to their cash if they have it at that. Looking ahead, right, we're well into 2024. Talk to us about EVs. Obviously, we saw an increase last year, as you mentioned. What do you think the outlook is for this year?
Yeah, EVs may struggle a bit here in Q1. We do have new legislation from the Inflation Reduction Act that kicked in. The IRA was always a bill that, one, supported EV sales, but two, was also about supply chain and onshoring of production. And it's the second half of those provisions that really kicked in here on January 1st, which means very few EVs qualify now for what we call the 30D funds, the purchase funds. Automakers are racing to address that. And when they do, I mean, so many of them, they're aware of the situation and they're trying to get back into qualifying. When they do, the good news is that those funds can now be used at the point of sale, as opposed to having to file them with your taxes, in some cases 16 months after the sale of the vehicle. Now you get that immediately if you qualify, which will help consumers lower their payments up front. But for the dealers out there that have a lot of EVs on their lots, that are looking at this with a little bit of trepidation, the good news is that consumers respond very well to leasing on EVs, and to get consumers, they want to come in and buy. Well, to retarget them toward leasing, they're going to find the best deals there, because the IRA funds will apply to any EV when you lease it. And so if you can move consumers that way, you may find some success.
Any final thoughts on today's topics?
I mean, yeah, we're looking at a very strong 2024. We're optimistic. We expect sales to increase to about 16.1 million, so very strong growth. And as mentioned, the majority of that growth is going to come from the retail side. So for the dealers out there, listening, there should be a lot of action coming your way. A lot of consumers coming in, looking to trade their vehicles. They've been in their vehicles for a long time. I mean, some consumers, they may have wanted to come back to the market in 2020 and 21, and they're just saying, I can't afford it. Well, they may be back in market here in 2024. So there should be a lot of action. 2023 was the second best year ever for dealers. 2024 will probably be the third best year ever for dealers.
Ooh, and that is a way to wrap this up. Music to all the dealers in their ears, right?
Exactly.
All right, great news there. Tyson Jominy, Vice President of Data and Analytics at JD Power. Thanks so much for your insight today. We appreciate it. And thank all of you for watching CBT Now, exclusively on CBTnews.com and streaming on Roku and Apple TV.